Good morning, friends. See, today we live in a world where we are not sure of how many years we live. We are not sure about normally again when life is certain and when it is uncertain. See, today we can find that uncertainty is a part of life. Any point of time, normally a person can be anything. So today we find that normally man is mortal. When man is mortal, we can find that normally he can survive to any number of years. So, or he can also expire earlier also because of unnatural calamities. So, in such case, normally what is required is normally again we can take into consideration one thing in certain, that is every person or every asset has got exposure to risk. When every asset has got exposure to risk, we should know that what happens when risk is getting affected, what happens to our dependents, what happens to our assets, whom we depend upon. That is most important. Today, an agriculturist may depend on his cow because a cow provides milk, and the same milk is again sold. When the same milk is sold, what happens now again? He will get back the cash and he will again get his sustainable life. Suppose if cow dies tomorrow, if the cow dies tomorrow, the same agriculturist suffer a loss. So which means that even cow has got risk. Okay, any human being also has got risk like the same. So in such case, normally what is important is we should know that normally again what is the mechanism that will protect our assets from risk. See, today we deal with the concept of insurance. Insurance is basically a mechanism which protects the assets from risk. How it protects the risk? Basically, how the insurance is done with a contract of insurer as well as insured. Insurer is a company which takes care of your risk. Insured is a person or an object which has to be insured. Okay. So in such case, normally these two people agree into the particular contract and then they take up the insurance. According to the insurance contract, what is important is one side we know that there is an exposure of risk. Other side we know that normally there is somebody, that is company, who is going to take care of this unexpected risks. So in such case, normally what is important is if we are insured, we are safe. A mechanism is there where unexpected risks are covered. It is just like you give something and you get back something. So what you give in return is the premium for your insurance policy. What you get back in return is nothing but a coverage to a definite amount which you choose as insurance coverage. One part. Now let us analyze what are the common risks which normal person has in his life. Two important type of risk what is to be covered here is, one is risk of dying early. Second one is risk of living too long. Risk of dying too early means a small child can die because of infectious disease. A person who is just about to earn, he can die because of accident. He can also die because of say food poisoning or because of riot strike or because of any unexpected matters also because of accidents. So in such case, normally what happens is there is an early death. Second one is normally again, as I said, living too long. A person who has lived for nearly 80 years, 90 years, 100 years may live. Why there is a risk? Because one side, when you live long, you cannot guarantee your health. You are dependent on others. So in such case, you are not only unnecessarily pestering yourself, whereas you are pestering your dependents also, one side. Second side, when you are living long, as long as you live, normally company will keep up the promise. It has to pay the pension. So which means indirectly it is a loss for the company also. That's why a company suffers the risk of loss. So that's why living long is also risk, as well as dying too early is also a risk. So in such case, normally what is important is we should know that normally again, as long we are insured, we are safe. Now let us understand normally what are the basic purposes for making insurance or taking insurance. Insurance is taken for basically four purposes. So let us put it like this. PIPS in short, P-I-P-S. P here stands for pension, I stands for investment, again P stands for protection and S stands for savings. So basically what is important is these four things are very important in any person's life. Pension is important because see, we know that as we are human beings, every human being is an asset for himself as well as for his family. When he is an asset, he generates income. When he generates income, this income is not permanent. As long as the person is fit and fine, he will generate. The moment he is not fit, he is hospitalized, he is prone to medical diseases. In such case, normally what happens is he stops generating income. So at that time, normally what happens now again, so there is something called as aging factor also in certain. So when the person is aged, he may not be able to generate more income. So in such case, normally pension is one particular source where he can survive his livelihood, where he can sustain himself, that is there. So in such case, normally again pension is required. Second thing what the person look in is normally investments. So one side you should invest. As said, normally what is important is you should save something. You should see that normally again you have got some resource with you, some funds with you at times of need. So that's why investment is required. In future, we can find that future itself is not certain. So in such case, if investments are there, you are independent. You need not become dependent on others. For that reason, investment it is. And third one is normally again protection. So we know that normally again protection is required from all kind of risks. We know that normally as we move out, normally there is a risk involved. So in such case, suppose if anything happens, so uncertainly if there is an expiry also, dependents should not suffer, for which normally we take care of something called as protection of ourselves. Savings is more important today, because one side normally if savings are there, our commitments can be met. If savings are there, we can find that we can meet our daily requirements, daily needs, daily requirements, whatever it is. So in such case, normally again savings is more and more important. So for these four reasons, people go for insurance. One part. And second thing is that what insurance is better today now? Which insurance policy is suitable for everyone, every common man, every middle class? As you know that normally India is still a developing country. Our economy is a developing economy. When we are in a developing economy, what is happening is the condition goes like this. According to statistics, in India, we have got normally only 5% people who are rich, 25% of the people who are poor. 70% of the major chunk of the population stands in middle class. The condition of the middle class people is, see, if they want one need to be met, you have to sacrifice other needs. So which means that always there is a trade-off. When there is a trade-off, what is required to be done is normally again, see, everybody cannot go for a large insurance. Everybody cannot go for small insurance also. But according to the person's income earning capacity, an insurance has to be chosen. According to the person's level of potential to his family, level of commitment to the family, insurance has to be taken. So the most suitable insurance which is suitable for everyone today is, first one is term policy. Term policy is a policy which is taken for long term. And here how this policy works is, initially you have to again pay the premium according to your age, according to your the sum assured chosen, and according to the number of years you are decided to pay the premium. So here what happens is, the rationale is, you will not get anything on your policy like maturity benefit, but suppose if anything happens to you and you are no more, your family will get a lump sum assured. So here what you are doing is, you are safeguarding your family by taking term insurance policy. According to the time value of money, we know that normally again money value decreases over a period of time. So in such case, normally again, if your amount of insurance what you take is not fair, you are not justifying your family, you are not justifying yourself. So in such case, term policy is the one which a common man can also prefer today. That is most important. Second important policy what a common man can take today is normally health insurance. Health insurance is important because we know that normally health is not permanent. Health is not steady and constant, because today we find that there is an impact of climatic change, and because of impact of climatic change, we can find that a person will get sick every now and then. He will get hospitalized. Person will suffer from various type of chronic disease, infectious disease, for which he has to get hospitalized. In such case, what happens is normally again, we find that normally the cost of treatment today has increased. Cost of operating charges has increased. Medicinal charges have increased. Doctors' fees also very much. So in such case, to afford this, middle class people will get difficult. So in such case, thinking about this, health insurance is required. One part. Third important insurance policy which a common man should have is normally again, it is regarding money back policy. In the case of money back policy, what happens is, every 4 years or 5 years, normally 20% of the sum assured which you consider for insurance is given back to the policy holder. In such case, what is important is normally again, initial 4 years you pay, and then what happens is after that 4 years you will get that 20% check back. So that can be again deposited somewhere as say 1 year FD or something else. At the end of the premium paying term, normally again you will get back one more check. So likewise only 4 years a person has to pay the premium. Then what happens now again, see this will continue till 12 years, then you will get back your sum assured plus investment whatever is there, say on time. So money back policy is one thing which is most suitable for the common man, that is middle class people. So these three insurances is must for any person. So what are the three insurance which are important is, the first one is term policy, health policy as well as your money back policy. This has to be taken. One part this you have to look at. See, these are things which is normally associated with your life insurance. So more about insurance is there, so which we have to discuss further. To sum up what we have learned in the case of insurance is, normally again insurance is a mechanism which will protect your assets from exposure to risk. Why insurance is required? Because people want pension, people want investments, people want protection, people want savings. And the type of policy which normal person has to take normally, as said, is term policy, your mediclaim policy or health insurance policy, or as well as your money back policy. These three things we have to have. There is no other option which is left over. The insurance is required basically for two reasons. One is to save ourselves, second one is to save our dependents, because normally it becomes our responsibility, because it becomes our ethics to save our family, to save our dependents, as well as to save our assets. So that's why, or that's what we need to learn about this. So thank you very much. We'll discuss more about this in the next coming session.